Hello everyone, and welcome to the Fiscal Philosophy YouTube channel. Today I'm going over Innovative Industrial Properties Inc., IIPR. This was requested in a comment. Somebody mentioned that they were in this stock. It reminded them a lot of MPW, meaning, well, it's a REIT and it's down a lot recently, and so those are the two things they have in common. The type of real estate is vastly different, though. They specialize in leasing properties to licensed sticky icky operators in certain states that allow that in the US. Remember, this is kind of a different sort of gray area thing because that's still not federally legal to have like dispensaries or growing operations and that kind of thing, but some states do allow it and have a licensing system in place. And this REIT leases to those companies that are legitimate within the confines of state law in those states that allow it. So it currently has an almost 12% dividend yield, market cap of $1.8 billion, down over 40% in the last month. So the first thing I wanted to really take a look at, because I learned on my journey with MPW, is that leverage might be normal in REITs, but too much can really be a scary thing, especially depending on how it's laddered and if you have like a big debt wall, for example, which they do, but IIPR does not. Okay, so we've only got about 150 million in net debt, which means that their debt exceeds their cash by $150 million. And at the moment, I was seeing about 150 million in cash and equivalents on the balance sheet. So really, they could pay off like half of their total debt right now. And compared to their market cap of 1.8 billion, again, this is not like a ton of debt actually for a REIT in my view. So I think the balance sheet, like for what it is, seems relatively clean and not really much of a red flag here in my personal opinion. And analyst consensus seems mostly positive. They mostly think it's worth more than what it's trading at today, which that could be possible, of course. It's not like they're not looking at it as like a strong buy, so it's not getting the same kind of love that some of the other companies we look at have gotten, but also not as much hate as something like maybe MPW gets. And I get it, it's like a hot new space, so analysts are probably going to like it a little bit more. And it does, at least surface level, look like there's a little bit less risk going on. So I can kind of see that perspective. I have a couple other important metrics I want to look at with IIPR, but quickly, before we do that, I'd like to remind you that I am partnered with Mumu and encourage you to follow my exclusive link in the description below to get up to 15 free stocks when you make a deposit onto the platform. And also, you have the ability to use 100 different trading indicators and get bonus APY on uninvested cash, and they do not charge any kind of monthly fees. Now, on to more numbers. So some of the other stuff I had pointed out earlier was pretty good. This, I don't feel as good about where this has been for the last few quarters. It seems like perhaps that the growth story here is maybe petering out a little bit. It's just looking a little bit flat recently. You see that from 2020 up through, say, 2022, 2023-ish, it was pretty solid growth. Now, the last year and a half to 2 years, it just kind of limping along. And that tells me that, hey, maybe they've already kind of rented out all the space that they can rent out to the operators that are going to work with them, and maybe there's just not as much room for growth until maybe more states open up the door to this kind of activity. After which, well, how many more states are there left, and how much of that real estate are they going to end up with? So it could be just we're even though it's still rather seems like it should be early days, maybe we're starting to already come up against the ceiling on how much this can actually realistically grow. And maybe what we've got is what we're going to get with maybe a little more if more states slowly come into the fold. That could be. I could be wrong about that, though. I think that's one of those things where you'd really want to see how management's guiding, like what their penetration is and like what their expansion strategy is. All right, so pretty similar thing with the adjusted funds from operations per share, which is sort of like the analog of EPS for REITs. This is basically considered like what they have available to in like kind of rent after they've covered everything in order to potentially pay out dividends or whatever. And $2.25 per share in the most recent quarter. Again, like it was growing at a certain point, and then it's kind of flatlined a little bit. So it doesn't seem like AFFO is growing at this point. So I'm wondering if maybe they've just come up against not being able to bring on new properties and new tenants, and maybe they don't have a cost-effective way to maybe fund more expansion right now because rates are higher than maybe they were a few years ago, and because of their dividend that they pay out, their equity isn't going to be more cost effective than debt. So maybe they're just sitting tight and waiting. So speaking of returns and everything like that, so you're getting a dividend yield of about 12, a dilution of about 1%, leaving you with a total yield of around 11%. And I think if they can't figure out a way to grow more, to bring up that AFFO per share, or if just things with interest rates and sentiment don't turn around, I could see a scenario where your total return is basically just whatever your net yield actually is on this stock, which, hey, an 11% total return is not terrible, but you're going to also have risks associated with that. And right now, like a 10-year treasury is coming right up close to like nearly 5% at the moment. So you have to then think, is it worth the risk to get a total yield of like 11% when you can lock in a risk-free 4.5%, 5% in the bond market right now? That's something that big investors are going to be thinking about, because obviously they have a lot to lose. And with this, I think to get back up, to regain that loss that they have had over the last month, the share price is down 40%. To regain that lost share price, something has to change with growth or with interest rates or something. The outlook has to somehow change. Now, they still have a little bit of room to keep growing that dividend, but 4% dividend growth with not much headroom left at this point, like they need to actually keep raising that rent revenue somehow in order to come up with the additional money to keep growing this dividend. So I don't think the dividend growth is really going to be all that strong. They might match inflation, maybe. It's one of those things where it's like, I would need to know a lot more about it to really get excited to want to get a piece, just because their tenants have an asymmetric risk, right? Because technically speaking, the DEA could bust down their doors and, basically bring out all the operators that rent from these guys in shackles and throw them in federal prison if they wanted to. Like, the only thing not doing that is basically kind of a handshake and a wink and a nod and a promise from the executive branch not to pursue those cases in states that have decided to legalize. But that could change depending on the whims of whoever is sitting at the head of the executive branch of the federal government. So essentially, I don't really have that much of an appetite for this stock at the moment. I can see why some people would. I do think that legalization in the very long run is inevitable at some point. I just don't know when that point will be. And I don't know, if things became really bad in the short run, how that could hurt long run shareholder value in innovative industrial properties. So that being said, I'm open to more facts and figures about this. Maybe information from management if you want to share in the comments if you hold this stock. But that's where I'm standing right now. Is I can see why people are starting to like it. It's starting to look like value. It's below book value now, although I wouldn't put too much stock in that. I've learned a hard lesson about book value over the last couple years and how that can evaporate quickly. So just keep those things in mind when it comes to IIPR. If you have made it to the end of the video, I would like to encourage you to like for the algorithm, subscribe if you are not already, and make sure you consider joining my Discord, which is linked in the description, where I discuss stocks like this and several others that are in my portfolio every single day. I talk in the Discord more than I post videos, although I am trying to actually up my frequency and get back on track. I was definitely a little bit lazy during the holidays, and I don't want to make that a habit. Make sure also that you consider watching every Saturday, 8 p.m. Eastern, Cashflow Kings Live. Have a show tonight after posting this video. Always love to see my friends in the chat there. And make sure you consider following me on the X platform at Mr. Macho Mog. Take it easy, everyone.